Last week, we saw a big reaction to the manufacturing PMI numbers. I'm very curious to see if we get something similar here today. So I'm going to pull up Forex Factor really quick. And let me adjust my selection. I want to do all currencies. So today we have, again, like I mentioned, we have the ISM Services PMI number. And this is a big number. Manufacturing last week really disappointed. The number came out lower than expected. And remember, as we talk about often, the PMI number is the Purchasing Managers Index, and it's a really, really useful indicator. In fact, it's one of my favorite ways to watch economic growth or lack thereof. Because, again, what we're looking here for, the reason I like this indicator quite a bit, not this indicator, this economic data as an indicator, is because Services PMI, basically what it does is it goes and surveys a bunch of purchasing managers in the services sector. And so if it asks a bunch of people, hey, are you looking to hire? Hey, are you guys loading up on inventory right now? Are you anticipating good times ahead? It's a lead indicator. For example, if you asked me about A1 trading, I've got my hands all in A1 trading. I know what we're up to, right? Obviously, I do this day in, day out. So I could tell you a lot about what I do and what things look like ahead. But this case, we can go ahead and ask with the PMI number, we can get a survey from many, many people in the services sector. And so if we get a read from all of them, hey, do things look good? Do things look bad? That indicator is forward looking. It's why it's a lead indicator. People love to talk about, indicators are lagging, or, what fundamentals, why I love fundamentals is they are leading. If you know what you're doing with fundamentals, the number one reason they actually are super valuable is because they are lead indicators, not lagging ones. Anyways, the services PMI number, we're going to watch that here together. We've got, about 35 minutes to go until then. So in the meantime, let's just do a quick pulse check on the market. Let me switch over to my pen color here that we can all see. Okay, so, and let me also switch to full screen. So let's go through this really quick. S&P 500 is down. The NASDAQ is down. The Dow is down. It seems like stocks are a little bit worried about going into this number, and perhaps some people are taking some profits, taking some money off the table ahead of PMI. And not to mention, guys, we have more than just PMI numbers this week. We have several key metrics. We have NFP on Friday and Jerome Powell speaking on Wednesday and Thursday up on Capitol Hill. So the point being there, it's a very volatile week. And so I find it interesting that ahead of some of that news, stock market participants are selling some shares. Anyways, the dollar index is giving back some gains as well, perhaps anticipating that ISM Services PMI could be weak. Again, we saw weakness last Friday with the manufacturing sector. Are we going to see the same in services? So again, we'll be reacting to that in terms of for the currency traders out there. The euro is trading lower. The pound is trying to break out here, at least on the hourly chart. And gold, man, gold is being sweet to me right now. I do have a long position on gold.
Did you know Trader Nick has a daily live show every Monday through Friday? Nick and our featured traders give their thoughts and analysis and even share their trades live for you every morning. We cover news events live as well, watching markets spike and then giving analysis immediately following. If you want to join the live stream community, look out for our live stream schedule on the A1 Twitter account each week, or consider turning on notifications and never miss another news event.
I was listening to something here this morning that a conversation amongst some of the CNBC guys and girls, and they were talking about Bitcoin and how there's perhaps a sympathy move with gold and Bitcoin right now. I don't know. What do you guys think? Do you think Bitcoin and gold moving together? I mean, we could put these guys side by side for a second, and I'll ask you guys, do you think, put it on daily, put it on the daily. These are both daily charts. I'm long on both of these, by the way. I'm long on Bitcoin. I'm long on gold. Both of them were running hot. So do you guys think there's is this correlation, or is this just coincidence? Something to think about, right? Big pop here on Bitcoin, big pop on gold as well. And we mentioned this yesterday. I want to show you this, guys. If you're somebody who's watching gold, be really careful out there, because most people are shorting it. Most people are betting against the run up on gold. And when I say most people, what I'm talking about is the retail positioning that we track on the Edge Finder. So we connect to various brokers that publish their client positioning, and we take a look at what retail traders are doing, and oftentimes we actually use it as a contrarian signal. So the contrarian signal right now on gold is actually to stay bullish. And so I am long gold. I'll show you guys my trade here. And let me just pull that up. So here's GLD. And GLD just keeps going, man. It's been a monster trade. And this stuff came out of nowhere, really. The commodities world just blew up. I was bullish, but I had no idea that it would do so much. This is why, by the way, when you see me talking about, I don't use a take profit, these events, this is why I don't use a take profit. You'll never see me in my traditional momentum style strategy. I don't use take profits, because the market can go so much further than any of us think, right? If you had said to me a couple weeks back, yeah, Bitcoin's probably going to go up 20% in the next few weeks, I would have said, no way. But markets do crazy stuff, right, sometimes. And so for me, I don't like to cap wins. I like to try and let winners run. Now, I do have strategies where I do cap wins with my option selling strategy, but for my momentum style of trading, I typically let winners run as much as possible. Why buying GLD and not buying the CFD? As a US trader, I cannot touch CFDs. They are illegal in the United States to trade on a regulated broker. So, and I trade exclusively with regulated brokerages. So I have an ETF, GLD long. It moves in the same way as gold. The percentages are the same. It's just adjusting to an ETF instead. Anyways, we got a lot of stuff to talk about here today, guys. The stock market coming down while gold and Bitcoin are rallying. Kind of a creepy setup there when you get stocks selling and Bitcoin and gold rallying. So yeah. Anyways, when it comes to the S&P, am I going to buy this pullback? I personally am not. In fact, let me double check though. I don't think we're getting bullish setups on the S&P. Yeah, we're not quite bullish S&P on the Edge Finder. If it was bullish here, I might consider it, but I just don't love the trade. I'm going to wait for a deeper pullback on the indices, and if we get it, then great. And if we don't, then I'm trading other things. I'm doing quite well with gold and oil right now, so I'm just waiting on the sidelines with the indices. My thought process with them is I would love to be a buyer, but I'd like to see a corrective move on the daily chart. I mean, this thing does not go up like this forever. And so if you think, hey, this is just, it's just going to keep doing that, it could. But again, I think a lot of people get very, very confident in these kinds of moves that this is just how index trading goes. And it's very easy. You just buy every pullback. And while I do love to be long indices, I do think that there's you don't want to be the last one to join a trend. You want to be calculated. You want to be, patient. And so I am looking for a deeper retracement when it comes to the indices. Hi, Nick. How does the Edge Finder generate contrarian signals? Is it a retail versus net position? Yeah, good question. So what the Edge Finder does is if you're talking about retail positioning, the algorithm that is under the hood with this thing, in terms of this category, this is one category that the Edge Finder considers out of several. What it will do is we'll take a look at gold, for example. If this number is over 60, meaning retail traders are very bearish overall, 60% plus bearish or 60% plus bullish, those generate contrarian signals or a +1 or -1 on the Edgefinder's algorithm output. So I'll show you this really quick. So gold is currently very short biased. That's going to give us a +1 read on this category on gold's Edgefinder, on the Edgefinder's output for gold. Look at that, guys. NASDAQ down 1%, hitting support. Question is, are we going to hold support as we creep closer to that services PMI number here this morning? Stocks just can't fall drastically when this dollar keeps being devalued. Kyle, that's a good point, but here's something to think about with stocks, okay? Stocks, if you think they can't fall, you have a couple components. You are actually right. Inflation over time, as long as it's kept in check, 10% inflation, stock market's not going higher. It's going to collapse because people are going to get destroyed on the retail and consumer level. Why? Because point number 2, GDP and growth, biz growth. If you want to talk about, hey, can stock market growth continue? You have to have both of these, at least in what's the phrase? Keynesian economics, Western philosophy economics, a healthy level of inflation. But you also need business growth. Business growth does not come if inflation is massive, right? And it sustains itself at high levels. If you have high interest rates, high inflation, that environment is not nearly as suitable to growth as a lower level of inflation. That's why right now growth stocks are doing remarkable, right? Inflation is relatively low in the last, well, incredibly low in the last 2 decades. And that's given a bias towards things like the NASDAQ. But remember, these things can get crushed as well when that story is no longer the case. When you lose this, if you lose this, guys, if the economy, and we're getting prints for this in 10 minutes, services PMI is this, right? Business growth and business performance, by the way, there's a direct, and by the way, business growth is another way of saying earnings, company earnings. Company earnings do not grow if the economy is really hurting. So there is a correlation. There is some level of similarities between the economy and the stock market, but it's not perfect because they lag one another. Oftentimes the stock market actually leads the economy. So kind of interesting. Anyways, NASDAQ pulling down to support. I mean, we are looking at a 1% drop here before PMI numbers. I'm going to tell you right now, guys, we likely, with this PMI number, we're likely going to see NASDAQ either break this pretty decisively, and we might actually start to see this downtrend continue, or if this snaps back, wouldn't be surprised to see a push back through the highs. Just transparently, be very careful looking at the NASDAQ right now. A lot of people are going to buy this thinking that, the NASDAQ's been on a tear. It's going to keep going up. It could, but be careful. I'm saying this over and over and over on all my socials. People who are getting locked in thinking that the NASDAQ is just this easy to trade vehicle, just be careful, okay? Gold is flying, and this is signaling something also. Gold keeps going higher, and the stock market's near all-time highs. Got to be careful with that. Is there something coming on the horizon? This is why I'm personally positioned heavily in commodities right now. You guys who watch me know. Regular viewers, these 3, I've got positions in each one. And I've got Bitcoin, which, again, really small position, kind of a more for fun trade, but not actually for fun. I mean, I want to come back to Bitcoin. Let's talk about our commodities setup. I've got a stop loss trailed. I'll show you the daily chart. This is where I'm at with gold. If gold comes down, it should hold this level. If it does not, profits are going to be taken. Okay, so I'm holding on to my gold position, which, by the way, full credit to the Edgefinder. Edgefinder got me into the gold trade here, 100%. It also got me into the oil trade. Now, the Edgefinder, I want to say this really quick. The Edgefinder is not a holy grail system. It's not going to do your homework for you, but it's going to certainly help.
Higher PMI, I think, would be bad for gold. I think it would be good for the indices. I think it would be good for the dollar. But the expectation is lower. And if we get that number that's lower, that just feeds more fuel to the overall stagflation idea that
Yep.
that I've been concerned about for, I guess, about a week after just looking at GDP, and inflation rates, and then if the labor number comes in lower, these are key signs that we are entering an environment of stagflation, and that's why gold is taking off, and VIX being up today like 5%, the dollar still weaker on the day, indices coming down, and gold up. That's just the combination of these things is very telling. So if that
It certainly is
continues,
eerie seeing all those, as you mentioned, gold, the VIX up, and at the same time indices down. And yeah, it's kind of creepy, Frank. And we might be on the cusp of something here. I don't think that that's kind of what the market is thinking, but look at gold. It's signaling, as you just mentioned, that we might have a creeping concern about stagflation, which for newer viewers, stagflation is the idea that inflation stays sticky and problematic, but at the same time, growth starts to slide and perhaps even jobs data comes out weak, which, Frank, we get that on Friday. So I don't know. We have a lot here to think about when it comes to, and by the way, guys, stagflation, super ultra bullish for gold. That's like the sweet spot for gold, is when you have stubborn, tough inflation, but growth is sliding. And so people are like, oh gosh, we might be in for something big. Let's park it in gold, right?
right? Yeah, that's the concerning thing. Um, but gold is near its all-time highs at 2148, somewhere around there. So I think it's more likely to test that before it makes another decision. So if it breaks higher, or if it retraces, I think the next move is going to be determined after it tests that level. But PMI could come out higher than expected or whatever, and then that could change gold to the downside, and we missed that completion. But I think gold right now is definitely it's close to that decision point of where it's going to go, because the move has already happened. There might be a little bit left over, and then we'll have to see. But the way things are setting up now is kind of like investor sentiment, almost betting on a miss in NFP.
Yeah, no, I think you're onto something there. And again, we are just about a minute or so here before the PMI numbers come out. I've got our screen set up for everybody watching. What we've got is we've got our stock indices over here on the left. You got the dollar index front and center, euro, pound, gold, and oil. Whatever you personally trade, feel free to watch the screen. I like to just get it so we can see everything at once. And really interesting, Frank, seeing indices come down hard here. And I know, in terms of selling options for premium, I love when indices fall, because then I can actually start selling some options again. So might be interesting to see if we get anything there. But got everything lined up. We'll see what this number brings us in about 30 seconds here.
I would like to see a beat in PMI. That's just because I have a lot of my positions are more so stock heavy. So
yep, fair enough. So let's we'll go ahead and do our quick breaking news here right now. All right, and there we are, just about 10 seconds out from, again, Services PMI. Let's just stand by and see what kind of reaction we get in the markets.
I don't see anything yet.
All right, there goes. Look at the euro. The dollar just dropped hard. That might suggest cooling numbers, which, of course,
it is
interesting.
Much cooler. 52.6.
Where are we at? Whoo.
Yeah.
Wow, Frank, we might be on something with that gold stuff we've been talking about.
You're still in gold, right?
I am. I'm in gold and oil. No stock indices. Look at the dollar, man. I am in the dollar as well, so this is not great for my dollar position. Taking out the lows here, it looks like. Look at euro and pound. Holy goodness, man.
Yeah.
That's a what is that? That's almost 30 pips on the euro. For those of you guys who watch EU and GU, those things are moving here this morning. Oil's holding its gains. Gold, look at that 21.37. Frank, you might have called it with that retesting of the highs. We might be right up to test those highs here today if this number holds. But what a move, man.
Yeah. Again, it's kind of spelling out, what are we going to see on Friday? And it just looks like we're going to see a miss almost.
Yep. And again, I also want to highlight too something about the Edge Finder. These PMI misses should show up in the economic score. It's part of the reason why, you look at inflation, you look at the economy factor, interest rates, overall the economic factors are kind of favoring continued bullishness for gold. It's giving us that sweet spot that we just communicated about, the stagflation idea, growth kind of struggling, inflation staying sticky, and interest rates maybe coming down as well. I mean, that is the gold sweet spot if there ever was one. And so again, and this is the thing, we've talked about gold. If you're going to get gold breaks to all-time highs, things have to align, and they actually seem to be forming an alignment. I guess, Frank, question for you, and then we got to bring Chris into the conversation as well. If you're looking at gold, and many people are, they're not in this move, how do you remain calculated, and what do you look for if you want to be long? What do you think? Like, how do you approach this?
I would just say there's probably two ways that I think are good, and it's wait for the move to complete up to 21.48. Watch for a break there, and if there's a break that signals or could signal more momentum to the upside, or wait for that break to pull back to the new support line on all-time highs, or you wait for price to test this, and if it pulls back, wait for some more support lower. But this gap right here between the 2060s and the 2090s, that's like the clear levels of support I see. So that's a pretty steep drop from where it's at now. So this whole range, I guess the last 3 days have been extremely volatile compared to the past month or so. We were looking at a range bound market, and we were questioning where it was going to go. So in my mind, I feel like if you're not in this trade, you got to be really patient with it, and I wouldn't try to hop on the train just yet.
Yep, smart.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.